Hello everyone out there, welcome back to the DW World, and today we're going to share a very exciting topic, and that's about the imposition of security law on Hong Kong. Well, on the 21st May year 2020, China announced a draft national security law to be imposed on Hong Kong sometime in September. Well, the law is aimed at prohibiting secession, subversion of the state power, terrorism activities, and foreign interference. And obviously, this move has agitated the US officials and Congress members that have been criticizing on the Beijing's move. On 27 May, the US Secretary of State Mike Pompeo has declared that Hong Kong is likely going to lose the autonomous status from China. And US also threatens on imposing new sanctions on Hong Kong. Well, today's question, number one, will China back off and reverse the decision of imposing this security law on Hong Kong? And number two, what will happen to the financial market when the security law is imposed? And number three, what's the implication over long term on Hong Kong and China economic reform? These are the three things that we're going to talk about and discuss exactly in today's podcast. Stay tuned and watch us through from front to back. See you there. On 28 May year 2020, China's National People's Congress approved the imposition of new national security law onto Hong Kong. The legislation will be implemented in the city sometime before this year end. Hong Kong, a former British colony which was returned to the Chinese rule in 1997, has been ruled under the one country, two systems policy. This policy enables the city to hold self-governing power, a separate legal and economic framework from mainland China, and various other freedoms, including limited election rights. This one country, two system framework is supposed to grant Hong Kong with a special status as a global financial and business center, which being an autonomous city from China. In fact, Hong Kong has acted as an international trading center and middleman party for various business sectors between China and the world. This is also the reason why US treats Hong Kong differently from other Chinese cities. For example, the existing heated Sino-US trade conflict doesn't apply to the tariffs of Hong Kong exports at all. Moreover, there are many Europeans and US financial institutions already based in Hong Kong for past 2 to 3 decades, while expanding their businesses largely, especially after year 2000, and these institutions are dealing mainly in astronomical figures related to the rich Chinese monies. Such financial institutions include, but not limited to, some big names like Citibank, JP Morgan, Morgan Stanley, HSBC, Barclays Capital, BOA Merrill Lynch, BlackRock, Inc., Deutsche Bank, etc., and many more European offshore banks. Ironically, the Americans have always thought that they hold the Chinese weakness by manipulating the capital market in Hong Kong with a silent threat to disqualify Hong Kong as an autonomous city should the Beijing government steps on the white boundary line of human rights and democratic freedom. Well, never did they know that China is now a faster quicksilver to cut off this tie and decides to impose the new legislation at the expenses of losing the shine of Hong Kong as the pearl of Asia. So, who has more to lose in the end? That depends who's got more potential losses incurring from the end game. In fact, we feel that the US and UK government are more astonished now at the abrupt decision of Chinese government now than to be reactive on the next move. Hong Kong was once seen as the Casablanca of the East in terms of espionage due to its free-wheeling entrepot status under British rule. But even after 1997, mainland officials expressed both public and private concerns that the city remained as a nest for Western spies. The Hong Kong Central protests in 2014 and the recent protests in 2019 on extradition bill have caused great damages to the economic growth of Hong Kong. And in fact, it has brought Hong Kong growth to a standstill for many months. China has blamed the protests on anti-China troublemakers, aided at times by some unspecific foreign and external forces. Following the months of anti-government protests in Hong Kong last year, the activists have stopped for many months due to the COVID-19 outbreak, but they just started to resume again. As the US-China trade war resumes, Trump administration has applied extremely high pressure on the China by barring all American high-tech companies to sell chips to the Chinese companies, threatening to delist Chinese corporations from US stock markets, deterring the elite countries to deal with Huawei, instigating the global countries to demand compensation from China on no evident grounds that they say China has been spreading the COVID-19. All these above have pushed Beijing government to impose the new legislation on Hong Kong. In other words, it doesn't need you to be as smart as a rocket scientist to deduce what China is doing now is actually a direct retaliation on Trump's propaganda. So, can we say Trump helps to bring an end to the autonomous system of one country, two systems policy in Hong Kong? After the handover of Hong Kong in 1997, the highest court in Hong Kong has been set by foreign judges in majority, with an initial aim to help maintain its credibility as an international financial center. Currently, in the Court of Final Appeal, 15 out of 23 judges, of whom 15 are foreigners from countries like UK, Canada, and Australia. After the imposition of new security law, all the foreign judges will be blocked from handling national security trials. In fact, they will serve as non-permanent members of the court, which means they will be called on periodically to sit on cases only. The law could also clear the way for a domestic intelligence agency in Hong Kong, similar to the colonial-era special branch, and that is specifically to deal with national security threats. The new legislation is also expected to enable Beijing to establish intelligence agencies in Hong Kong. Mainland security and intelligence services now, at the current moment, still have no enforcement powers in the city of Hong Kong. Thank you for joining us, and we are coming to the last part of today's podcast. And here's a summary. This year, 2020, has been a very versatile and highly volatile year. In addition to the impact of COVID-19 that has dented the global economic growth, well, we feel that the biggest impact of the pandemic crisis will be seen in Q2 season, which we are in now, and that will hit the hardest on European countries and USA, which these two regions have been stationary in their economy now. This group of mass data will be released only sometime mid-July and likely to cause a ripple effect over to the whole of Q3 seasons. However, the real economy of Q3 and Q4 seasons will be very much affected by the slowdown of overall economies in the air, sea, and land transport. In our opinion, this will mainly come from the ruptures in tourism industry, hospitality, housing and property demand for, consumer spending in general expenses, corporate spending on durable equipment, rising consumer debt, and also rising in sovereign debts among the governments, and most importantly, demand for in the crude and energy instrument. In general view on Hong Kong, we reckon that the short-term impact will see a lot of funds flight out from the Hong Kong capital market that will come mainly from the foreign investment and all the super rich high net worth individuals. Hence, we do not encourage any active participation in Hong Kong stock market on a short-term period from now moving over to the next few months. However, on long-term basis, we foresee that Hong Kong will be stabilized, well, although it will take a while, As long as the Beijing government is willing to open and free the Hong Kong capital market for foreign investment, we still hold very positive view on Hong Kong market, given the solid foundation in communication infrastructure, building and transport infrastructure, and most importantly, legal and financial framework, which has been in place for many years. Technically speaking, we reckon the imposition of security law on Hong Kong, and the main reason is to dispel the foreign interfering forces in order to regain peace and total control on the island that we call Pearl of Asia. In our forecast, we foresee that after moving into 2022, which is 2 years from now, very likely Hong Kong will regain its economic growth and attain a long-term stability on both social and financial grounds, especially when Hong Kong Exchange has been a very innovative exchange, and as long as they continue to create more investment opportunities to attract the global investors, money will continue to flow back into Hong Kong for capital investment. As the Hong Kong dollar is pegged to US dollar value, the rising popularity of renminbi in Hong Kong market will also become more popular over the next few years after the imposition of this national security law in Hong Kong. In such a situation, we won't be surprised to see that the return of a massive foreign fund to Hong Kong, as both the Hong Kong dollar and the RMB will enjoy positive interest rate and positive yields that will attract more offshore investment back into Hong Kong in coming years. As the Western economies are already sunken into negative interest rates, and US is also moving in the same direction, there is only no doubt that the recovery of global economies after the current economic impact of COVID-19, and these monies will most likely come back into Asia countries, and we won't be surprised 2 years from now, Hong Kong is definitely one of the ideal place for all these foreign funds to come back. Well, this is the end of today's podcast. It's all about the trade predictions and the forecasts that we have just shared with everyone here on Hong Kong after the China imposed the national security law on it sometime by end of this year. This is DW World. Thank you for watching us, and stay tuned with us. Subscribe, be our fans, and we will come back with more exciting topic.